The GASB's objective is not to determine whether or not a government made money, was profitable this year. We don't present an income statement. So the matching concept is not really as relevant to a lot of governments. Traditional concept of matching has been that you should recognize the costs of revenue or costs related to revenue at the same time as you recognize the revenue. The matching principle that's been traditional, and it goes back further than I do, so it's just slightly this side of dirt. It really doesn't work in the governmental arena very well, except in certain types of business type activities, but there are other ways to accomplish it at the same time. The GASB literature in our conceptual framework has what we call inter-period equity, matching the revenues to the period or periods in which they pertain and the outflows in the period or periods to which they pertain. You then have a measure of inter-period equity, and you're able to compare period to period whether or not the government is raising sufficient resources. When you comment, don't say, well, this violates the matching principle, because it doesn't really tell us what your concerns are. Does it meet the inter-period equity, or in your view, doesn't it? How can we improve it so that it better demonstrates inter-period equity? That helps us to really understand what your concerns are, more than telling us that, well, this just violates the normal notion of matching.